Hello, everybody. Adam Bergman here, and I have Casper, Dabek, and we are going to be discussing how to demystify the self-directed IRA. And we're going to tell you everything you need to know about IRAs, the self-directed IRA, how it works, what you need to know, why it's such a powerful investment tool, such a powerful retirement tool, and some of the key pitfalls to be aware of when you're setting one of these up. So really excited, Casper, that you're joining me on this webinar. It's going to be a lot of fun. We're going to have some good debates, good discussion. And I think it's going to be really interesting. So without further ado, let me kick this off, and we will get started with the presentation. So a clear path to retirement control, which is really the key foundation of the self-directed IRA. I'm Adam. You guys know who I am. I'm a tax attorney, master's in tax law, worked at some of the largest law firms in the world before I started IRA Financial. And what really led me to start IRA Financial was I was actually mystified why I was not able to invest in alternative assets with my IRA. And Casper, we've been working together for what, 3 years?
Yeah, going on the fourth.
Yeah.
So
Casper knows everything I know, and he's just younger and better looking.
I don't know about that, but you've definitely been a good mentor. That's for sure.
So obviously you guys know IRA Financial. We're, I think, the best in the business when it comes to setting up self-directed IRAs. We have over 27,000 accounts, almost 4.5 billion in assets. And I think what really separates us is not that we can just set up these structures, but we are going to partner with you along the way to keep you in compliance, to make sure you are engaging in the most tax efficient structures you can, and obviously making sure that you are taking full advantage of the power of the self-directed IRA. So we have flat fees, no hidden fees. We got a lot of exciting new products and opportunities that we are working on. So I'm going to set the agenda, and then Casper and I are going to kind of go back and forth. And we're going to start with the basics of the self-directed IRA, what IRAs are, traditional Roth, SEP, simple. We're going to go into the flow charts of how the self-directed IRAs work, investment options, prohibited transactions, UBIT, and then kind of how to set one of these up. So let's get started. Casper, you want to take the lead?
Yeah, absolutely. And I am really happy to talk about self-directed IRAs. The opportunity you get with using a self-directed option is just phenomenal. There's so many doorways that we can open for you. Like even this morning, I have an interesting story first to start off is I helped a client who has always dreamed of making an investment. And it's actually a sheep farm. So we'll get into kind of other options you can do, but it's just the possibilities you can do with these IRAs. It's truly when I first started here, it truly opened up a lot of perspective, and that's why I love helping clients do this. So, I just want to kind of get that out of the way, just to kind of, say this is an option for everybody. You have, different investment options, and, we'll go over the type of IRAs here. So one of the most common ones I work with is a traditional IRA, because typically out of a 401k, 403b, other kind of employer sponsor plans, it will typically be this pre-tax kind of format. And to get it rolled over or transferred over, you'll want to stick with that pre-tax to pre-tax kind of, tax status. So that's where we open a traditional self-directed IRA for you. The benefits are, of course, you get that pre-tax deduction. So if you make a contribution, you are able to get that deduction off that contribution compared to, like a Roth, for example. So if it makes sense for you, you want to lower your taxable income, this could be a very solid plan just to start off immediately. Your contributions, of course, are limited. You have either 7,000 if you are under 50 or 8,000 if you are over 50. So the IRS does give you a chance to kind of, catch up. So the distributions, the one thing that makes us different from other IRAs, like the Roth IRA, for example, is when you get gains, it is deferred. You're not paying any capital gains tax. The income is flowing back into the IRA. But let's say you want to take some money out, you want to use it for personal reasons, then you'd have to do a distribution. So in a distribution format, you will be paying tax. It is based on your income tax bracket, like ordinary income tax. And you can qualify for a distribution after the age of 59 and a half. Before 59 and a half, you may be hit with a penalty if you take it out early, plus that ordinary income. And one thing, of course, with this plan is it does have required minimum distributions. So once you reach age 73, the IRS is basically saying, hey, you've got all these, tax-free gains. We want to start, pretty much tax you. They want their money in a sense. So you will be able to calculate based on your life expectancy, your asset value, and that is something we can help out with just to make sure you're meeting those RMD requirements and you have nothing to worry about with the IRS.
Yeah, perfect. So let me just go back real quick. So all IRA types, including health savings accounts and Coverdell, can be self-directed, right? So when IRAs were created back in 1974, there was no distinction between IRAs that invested in stocks and IRAs that invested in alts like real estate. So the key and the beauty of the self-directed IRA is that the term self-directed IRA, you're not going to find in the tax code. So what IRA Financial does is it allows IRA owners and Roth IRA owners and SEP and Simple and HSA and Coverdell the ability to invest what the IRS wants you to invest in, which is traditional as well as alternative assets. So we are talking about IRAs here, and we're going to talk about the Roth IRA in a second, but it's important to remember that the self-directed context is no different, meaning you can use a traditional and a Roth and a SEP and a Simple to do alternative assets. It's not a separate type of IRA. That's really what I'm saying. It's just an IRA that IRA Financial allows you to have more options with. So that leads me to the Roth. It was created in 1997. Outside from the traditional IRA, which was created in 1974 by ERISA, Senator Roth of Delaware created this as a way to kind of get more people interested in saving. The beauty of the Roth, and I'm a big Rother, is you don't get a tax deduction for what you put in, which is $7,000 or $8,000 if you're over 50. But so long as you're over 59 and a half, and the Roth has been opened at least 5 years, everything you pull out is tax-free, right? So that's why I think it's truly the best tax shelter out there. My opinion, I would rather defer the deduction. Like, deductions are great, but I would rather be able to shelter all my gains from taxation for the remainder of my life. And I can then pass it to my spouse tax-free, and then my kids would have 10 years to pull that money out tax-free too. So it's a great way to build real wealth for your family and also legacy wealth for your kids and grandkids potentially. One thing to remember is that technically there are income limitations for doing Roth IRA contributions, around 250,000, but you can also always do what's called a backdoor Roth IRA. So even if you make $100 million a year, you can do an after-tax IRA contribution and then convert it to Roth. So those income limitations really don't have a lot of weight. The rules changed in 2010. Before 2010, you really weren't able to do a Roth conversion if you had more than $100,000 of income. We had a financial crisis. The government needed money, so they wanted people to do conversions, and they've kept that rule and that option open. So now you can just make an after-tax IRA contribution and convert it to Roth, and then irrespective of your income, you can start building up Roth wealth. But again, there's no requirement in distributions, and the key to remember is 59 and a half in 5 years. So long as you satisfy those rules, you can lock in tax-free wealth for you and your family.
Yeah, and honestly, I have a Roth as well. I mean, it's just one of the best plans out there, 100%
All
guaranteed.
my money's in Roth. Like everything, 401ks, IRAs, like everything I do is Roth.
Yeah, exactly. So I guess just to kind of pivot into an employer plan, which is a SEP IRA. The reason why you'd want to get into a SEP IRA is, like, let's say you are self-employed and you want to have access to some kind of retirement plan. An IRA typically has $7,000 for contributions, but in this one, the really benefit is that you can do up to 70,000. I mean, that's 10 times as high compared to the other IRAs here, but it is a little bit different on how you make the contribution. It is technically classified as like a profit sharing plan, meaning based on your income, depending on how your business is set up, that's the percentage that you can contribute. So, like, let's say if I had a C corporation, I made $100,000. Right there, you can see that 25% of my W-2 I can now contribute. So of that 100,000, I can put in roughly, also about $25,000 or so. So very, very beneficial if you are having that higher income and you're self-employed. You still want to take benefit and put your money into a safe plan that you can also invest into, and you can get a lot of deductions on that as well because it has such a high contribution limit. One thing people don't know is that Secure Act 2.0 actually allowed for a Roth SEP IRA, and that's something that we do here as well. So if you are going and you're looking for a Roth option, we actually have that enabled. You can make the contribution in a Roth, whereas other providers may not allow that. So that's something that we definitely have received a lot of influx. I've helped a lot of clients recently with a SEP Roth, just because it's something that we can actually offer. And if it's offered, why not take advantage of it? So it will follow the exact same rules as the IRA, the Roth IRA for distributions. Same kind of deadlines for contributions roughly. I mean, if you're on extensions and so forth, you can definitely work with your accountant to make sure you're meeting those deadlines. But we can definitely talk it over with you, make sure you understand the rules, the ins and outs for your business, how it could be beneficial. And I'd say it's definitely a big popular plan among self-employed individuals.
Yeah, absolutely. It's a pure profit sharing plan. So that's one thing to keep in mind. And, really good point, Casper. Unlike a 401k where, for example, in 2025, you can put away 23,500 under 50 or 31,000 over 50. That's dollar for dollar on your income. The profit sharing is that 20 or 25%. So it's a good plan, but the 401k and is generally a little bit more popular. Simple IRA, I call it, again, a kind of a poor man's 401k. It's an employer plan like a SEP, but it's actually a deferral plan. So it's not a profit sharing, but the income limitations, I should say the contribution limitations are lower than the 401k. Right here at 16.5 and a $3,500 catch up versus the 23.5 and the 31. There's no loan feature. And it's really it's a nice plan. It's not as popular as the 401k. Truly, I think the only advantage of the simple is that it's easier to bifurcate accounts. So if you have 10 employees, each employee can have their own simple IRA account, and it's easier to do self-directed investing because each account is bifurcated. And now, because of Secure Act 2.0, you can also do pre-tax or Roth. So it's a nice plan. I'd say it's the least popular. I'd say the most popular are traditional IRAs, then Roths, then SEPs, then simples. But it's an option, and of course, you can use it to self-direct.
Yeah. So, I mean, I guess, some questions to determine is the self-directed IRA a good option for you? And I would almost always say yes, because if you are looking into any kind of portfolio diversification right now, it's huge. A lot of my clients I talk to, they maybe say the stock market's uncertain. They're not really sure what's going to happen. So they just want to go into something they can really know and trust. Maybe you're a realtor and you want to do real estate. Maybe you see gold is going pretty high and you want to kind of hedge and invest into gold. So any kind of alternative asset that you have in mind, it really is doable through this IRA. So that's definitely an immediate yes. You can absolutely go ahead and make sense for you. If you are looking to do a rollover from a previous account, maybe a 401k, 403b, just quit your job and you want to see what else you could really invest into. Again, you could definitely do it inside an SDIRA. We take rollovers directly. We take transfers directly, no tax implications or penalties. Of course, you can open a brand new one and make new contributions. Maybe you're freshly employed and you're self-employed and you're looking for that SEP IRA option. You can absolutely open one, start from scratch, make contributions. So it exactly, whether you're an individual, a business owner, we have options for you. These IRAs are so flexible. You can go ahead and make investments. You don't necessarily need to have something very sophisticated in mind. You can have something like a real estate property, maybe you saw across the street. A lot of clients I deal with, they come to me with an idea, with an asset in mind, and they're like, I just want to know how I can make this happen. Could I make this happen? And typically, yes, you can. I mean, unless, we'll get into the prohibited transactions, of course, but if it's, qualified for the IRS and meets the IRS codes, you can absolutely go ahead, whether it's an active investment that you're pretty hands-on, or maybe it's more of a passive investment where you invest in like a REIT or private lending and you're just kind of collecting, principal and interest. So there's a lot of options that you can look into that could make sense for you.
Yeah, and I'll just add one thing to it. I mean, this is how smart people get rich. I mean, if you look at the Forbes 500 list, most of the people are involved in alternative assets. And when I say alternative assets, I mean private businesses, I mean hedge funds, private equity, venture capital funds, credit funds. That's where the billionaires are. So why shouldn't you get access and exposure to the same type of investments that these billionaires are? And thank God, Congress allows us to do that, dating back to 1974. So this is not a new structure. Self-directed IRA should be right for every American. Every American should diversify. And again, if you don't want to trust me, Larry Fink, who's the CEO of BlackRock, the largest asset manager in the world, he just recently came out and said he thinks 30% of your asset class should be in alternatives, non-publicly traded. So it is something that is imperative and something that I think is going to help you be able to grow your nest egg. So let's go through our products. Casper, why don't you start with the self-directed IRA? I'll handle the LC, and then you can do the cryptos. You want to tackle I'll jump into the popular
Yep.
investments. Actually, before that, let's talk about the structures. Let's do that. Let's talk about we talked about the self-directed IRA benefits, right? Tax deferral in the traditional IRA. You don't pay tax as your income grows. The Roth, 59 and a half in 5 years, you can shelter all gains from tax, meaning if you bought something for $1 and now it's worth $1 billion, tax free, right? Where else can you do that? Diversification, as we just spoke about, you get to invest in what you know and trust. Maybe you feel more comfortable with real estate versus Wall Street, and you get access to additional investment and capital. So let's start with the self-directed IRA, Casper.
Yeah, absolutely. So the flow chart here, of course, a lot of clients will ask me, how do you actually make this investment? How do you prove that this is an IRA owned asset? You're not taking a distribution. And that's where we can kind of go into this flow chart and tell you how the money will move. So right now, like let's say you have like an IRA at a different broker and you want to transfer it to IRA Financial. What we would do is a direct transfer. So we would just basically request the money to be sent over in kind, whether it's a transfer or rollover, it'll follow the same kind of process. It's a direct transfer, meaning it's going from custodian to custodian, kind of like a trustee to trustee transfer. Once the account is funded here in the self-directed IRA with IRA Financial, that's when we work with you to execute the investment. So let's say you want to, invest in a private business. What would happen is you'd actually reach out to that company. They provide you a document. It's typically like a subscription document, for example. We just want to make sure that it's signed in the IRA's name. We sign off on it as custodians, because think of it at this, like when you're making an IRA investment, the IRS wants you to have a middleman. In the case of a middleman, we, IRA Financial, are that middleman. We are your trustees. We want to sign off on everything for you. We want to put it through our audit system, make sure everything's done right, our compliance checks out, everything is followed correctly. We're done the I's, crossing the T's. So a lot of clients like this option because we can back them up on everything they do. So then just to kind of go back to that document here, since we're signing off on everything, we also need to know where to send the funds. You provide us the wiring details. We actually have a packet for you. It's an investment authorization where all this is already, pretty much made very simple for you. You just fill in some details and we take it from there. We'll be able to execute that investment, send it over directly into that private business, or maybe it's real estate or precious metals or anything else. They typically all have their own kind of document to work with, maybe like a purchase invoice or a deed or anything that we can show it's titled in the IRA. And then that's what we report on a yearly basis as well, is that we're showing the IRS, hey, we're custodians. This is an IRA asset. It has not been distributed. Here's the fair market value. So that's typically how the custodial control, just a regular self-directed IRA will work. If you're looking to just make an IRA investment, maybe it's not intensive as to a lot of volume or frequency. I would say a lot of clients tend to go down this route because, of course, you just want to work with us. You're beginning and you want to get a feel of how it operates. And then we just take care of all the administration paperwork on the back end with you. So very, very smooth process. And of course, any gains that you get from that investment will be sent right back into IRA Financial tax free.
Yeah. Yeah, good point. I think it's the most common. You get the most hand holding because the transactions generally flow through us. We'll record keep them, we'll administer them and handle all the compliance. I agree with you, Casper. I mean, what transactions do you think are like the most common for this structure?
I would say a lot of private businesses or hard money loans right now have been really common. Real estate typically will go into the LLC option, the one that you'll cover here, unless you're just maybe buying and just letting the land appreciate or something similar. So the main transactions I see are ones that aren't very high in volume, whether it's just kind of one and done or every so often. That's what I would typically see. Maybe precious metals as well. You purchase precious metals, you just hold it in a depository and you just let it appreciate. That's the kind of investment strategy a lot of clients will go with this kind of structure.
Right, and it's super easy and we'll go through
Yeah.
the process to how to open the account, but it's basically three steps, right? You open an account with IRA Financial. If it's a transfer, we'll initiate it tax free from the institution like Fidelity. If it's a rollover from a former employer, we'll help you initiate, and then third, we'll send the money once we receive it to the investment, and then you're pretty much done.
Exactly. That's why a lot of clients are just maybe getting started. They'll go ahead and use this, kind of structure because we dot the I's and cross the T's. That's the easiest way to put it. We're just making sure everything is done correctly, and it's like we're hands-on with you.
Yeah, that's it's a great product. So I'll tackle the LLC because it's my favorite. I've written two books on it. I started working with the IRA LLC back in 2009, and then 2000 end of 2009, one of the first few companies in the country to allow it. Just because of the expertise I had in tax, I felt comfortable working with it. So really, the self-directed IRA LLC, the only difference in the IRA LLC, also known as the checkbook control, which I'll explain where the name derives from. And then second, the only difference, if you look at the flow chart, the only difference is we're including an LLC between IRA Financial as the IRA custodian, the regulated trust company, the middleman that Casper mentioned, and the IRA investment. So what does the LLC do? Okay, the LLC is a limited liability company. What does that mean? It means it gives you limited liability protection. So it protects all your assets outside of the LLC, all your other IRA assets. It also gives you privacy, anonymity, right? The investment's titled in the name of the LLC, not Adam Bergman's IRA, but ABC LLC. So depending on where you form, it's a little more difficult to uncover who actually owns the investment. And thirdly, and maybe more importantly, you get speed. Why? Because the LLC is owned by IRA Financial. So your IRA owns the LLC. But when an LLC is operated, it can be operated by the owner, which we don't want, right? Because an IRA is not a person, or it could be operated by a manager. So what we do is we design our structure involving a LLC manager managed agreement. So the manager, Adam Bergman or Casper or John Doe or Jane Doe, will manage the LLC. So for example, I have $100,000 at Fidelity. I roll it tax-free to IRA Financial because I want to do a real estate deal. In self-directed IRA that Casper mentioned, the custodian controlled, the most common and traditional product, IRA Financial will send the money directly to the investment, right? I'll just back up a sec. So IRA Financial sends it directly to the investment. Title is IRA Financial Trust Company for the benefit of Adam Bergman's IRA. And IRA Financial is involved in terms of record keeping, administration. So if you need to pay the plumber, you need to write a check to the tax department, IRA Financial will do that for you. If you look at the checkbook control LLC structure, the LLC is the owner of the investment, not the IRA. So since the LLC is the owner, the manager who controls the LLC is now responsible and has the authority to manage the LLC and also manage the investments of the LLC. So it will pay Paul the plumber or Drew the developer or the individual that's repairing the pool or whoever the case may be. You as the manager have what's called checkbook control. You can call it wire control or like Venmo or Zelle control or whatever you want to call it. But what it really means, checkbook control, is the manager has the control, not IRA Financial. So you get limited liability protection, you get privacy, you also get speed. And since an LLC is, consider it like a funnel, it's not an entity level tax enterprise. Like if you look at a C corporation, think of it as a big box. Why? Because C corporations have a 21% entity tax. An LLC does not have an entity level tax. It's a funnel. It's a flow through. Only the owners pay tax based off their income tax rate. But what do we have here? We have the IRA Financial. IRA is the owner. IRA Financial doesn't pay tax. IRAs don't pay tax. Why? Section 408, tax exempt, right? That's why we're talking. That's why we want to invest IRAs and not personal money, because we don't pay tax. It's a tax exempt structure. So the LLC will give you tax-free investing. It will give you speed, checkbook control, give you anonymity. It will also give you limited liability protection. So it's a great product. Is it necessary? No, right? I mean, if you're doing Casper, like a one-off, if I'm going to invest in your business and I'm going to invest in your new AI business and it's going to be a 7-year hold, I don't need the LLC. But it's not wrong. There's no right or wrong. If I want the LLC, maybe I want privacy, right? Maybe I just want a little more control. Or maybe I was going to buy a piece of land and I'm just worried about people hunting on the property and I want limited liability protection. So it's never wrong. There is a cost. We charge a one-time setup to set it up. And we also have services where we will handle the maintenance of it. So we can obviously and will assist you, but there are some minor additional costs for the LLC. But if money is no object, then I would do the LLC every day of the week. Where should I form it? Generally, if it's real estate, you're going to form it in the state where you're going to own the real estate. If it's not real estate, you can typically form it anywhere you want because you're not going to be deemed to be actively engaged in a trade or business. Who manages it? It should be you or a spouse or someone you trust because that person's going to have authority over the LLC. What's special about it is the structure. So it's a special purpose vehicle. It's not a regular LLC in the sense that the operating agreement and the management of that LLC needs to follow certain rules. based off the prohibited transaction rules, UBIT, and some of the other guidelines that we're going to get to in a second. And the LLC operating agreement, which is the most important document, something that we specialize in drafting, will make sure that the LLC is structured and operated in the right manner. So let's go back, Casper, to let's jump into popular investments now.
Yeah. Well, I mean, not yeah, exactly. So now that you know the two different structures, you can kind of see which one would make more sense. Like the LLC, for example, I would say is the highest portfolio allocation I see for in real estate. There's a lot of fix and flips, a lot of activity, a lot of liability. You want to be able to have that control. And with the LLC, I mean, you have access to that cash flow. You are in charge. You can collect rent immediately. You can pay a contractor. You can do everything you need to do. And it just makes sense that way because otherwise, if you go through the IRA, it's doable, but you are having a lot more communication. So real estate, there's so many opportunities. I mean, there's multifamily units, there's residential, commercial, Airbnbs, raw land. It's endless possibilities what you can invest in. I always hear different stories about what clients want to do. It most likely, yeah, you can do it. So I love it.
What's
It makes me
what's the
want to get into real
craziest?
estate.
What's the craziest one you've heard? I'll tell you mine.
I mean, it depends because real estate, I mean, sometimes people want to, buy lots right next to them. Maybe they want to purchase something out and rent it out to somebody. Maybe even like the farms, of course, that's kind of real estate related. You buy a farm, you want to buy some land, build an RV park on it. There's different kind of, I'd have to think, but yeah, there's many other options.
Yeah, I've had clients buy vineyards in Argentina. I've had people buy land in Zimbabwe, Lebanon. I trust me, in 15 years, I've seen almost everything. I've seen hundreds of thousands of transactions, some crazy, and sometimes the crazier ones actually hit, believe
Right.
it or not. But anyways, yeah, it's funny.
Yeah, exactly. That just proves that yeah, these are options, even international. You don't have to do it in the US. I mean, I help a lot of clients in many different countries and it just works. And the LLC is also beneficial there because of the time change. Maybe the countries have policies in mind that you need to maybe open bank accounts or other companies in that country. So very, very flexible there. For metals, of course, we have seen an uptick because it's, there's always that hedging. You always want to have something that you trust and that and that's just consistent. Private business stock is something that I definitely deal with a lot. People will call me and be like, "Hey, what about like Peter Thiel? What did he do? With his Roth IRA, how did that operate?" Or maybe you want to invest in a beginning business, low valuation. Maybe it's pre-IPO, so before it goes public, you want to get in on that. Even like private businesses, you could go with the IRA option or with the LLC option because I've had clients that are saying the capital calls they come and I need to just go ahead, take advantage of it right away. So they want that freedom and flexibility to go ahead and execute transactions right away. So investment funds, any hedge funds, real estate syndications, maybe you want to pull in. Recently, I had a question is, can you invest into like an investment LLC, like an LP in a sense where they just co-invest and they go ahead and make investments together? Absolutely, you can. So very flexible, and crypto has been very huge, as everybody probably has heard. Bitcoin will go up and down, it fluctuates. So a lot of clients want to kind of get in, ride that wave, try and utilize the funds, and not have to pay any capital gains because crypto you buy, you sell. Maybe you are just holding on to it, but if you are buying and selling frequently, you want to avoid those additional taxes, and that's why in an IRA we have seen a huge, huge uptick in clients investing through a crypto kind of platform.
Yeah, our platform's awesome. I mean, we've partnered with Bitstamp and Robinhood, which purchased Bitstamp to provide a really seamless, easy to use, and efficient, very cost effective platform. Which again, I personally like. Without giving investment advice, I think people are crazy not to have just a little bit of exposure to Bitcoin in a Roth IRA. Like, why wouldn't you? Whether it's $1 or $100 or $1,000, depending on your financial capacity, like you want to get exposure to emerging assets, and that's why I think ultimately I believe so much in the self-directed IRA world. I mean, I think there's nothing more American than having freedom and control of what you invest in, and not letting the major financial institutions dictate what you can invest in. And at IRA Financial, we have a different model. We don't sell products, right? We're your partner. We're not going to upsell you products. Not looking at we don't charge commissions. We have flat fees. We want you to have control and freedom and invest in whatever you want. And our job is to kind of unlock it and keep you safe. And that's the beauty of the US retirement system is you have so many amazing investment opportunities. And there's only a few things you can't do. Casper, you wanna hit on the prohibited transactions?
Yeah, absolutely. So there's two codes, IRS Section 408 and 4975. The 408 one really goes into what you can invest in, whereas 4975 goes into who you can deal with. For 408, it's really listed as, collectibles. That could be artwork, baseball cards, diamonds, something in that area where it's just collectible. It's not an asset that you're really investing in with the marketplace. There's life insurance. Of course, you can't have an IRA on a life insurance policy. And then subs chapter S corporation. So really, it's just because the IRA doesn't meet the definition of what can own an S corp. So you cannot make that investment with an IRA.
Yeah, why don't you finish?
4975.
Yeah.
I'm sorry.
Finish it off. 49.75.
Yep. All right. Perfect. Then 4975. That's the disqualified people. That's what I was saying. Who can't invest into it? So typically, you see, you know, maybe you want to invest with yourself or family members, and really the key factor that's really described by this code is yourself, your spouse, and direct family lineage. So, like, let's say my parents, my grandparents, my children, grandchildren. That's typically who's disqualified. But if you want to invest with your brother, sister, uncle, aunt, cousin, that's fair game. So you just got to watch out for, who you deal with in this section. So like, for example, I want to buy a real estate property, and then want to rent it out to my daughter. I don't have any kids, but if I did, let's say I want to rent it out to my daughter, that would be prohibited because that's a family member who is disqualified. Or maybe I buy a house and I live in it as a primary residence. Again, it's disqualified. I'm treating it as maybe I'm not selling anything, I'm not paying rent to it, but I am self-benefiting because I'm taking advantage of an IRA asset, even if there's not necessarily money being flowed through, because it is an IRA asset, it's treated for investment purposes. So that's really what the IRS wants to do is you're making sure that this is an IRA asset, not your own personal reason. They want to see your retirement grow. So they just want to put in these transactions that just say, hey, you want to make sure it's actually growing the right way. So for example, another one was like personally guaranteeing an IRA loan. We'll get into that as well with a non-recourse loan, because if you use recourse, now you're personally guaranteeing yourself. Maybe you want to put your house for collateral, your car, anything else. It's an IRA asset. Technically, you two are separate entities. So my assets do not go into an IRA asset. It has to be non-recourse. I cannot personally guarantee, cannot sign off on it. There's some court cases that verify this as well. So I'm pretty sure it's Peak and Fleck, Commissioner. But that's really what goes into it, is that you're putting the house, for example, for collateral. The bank has the recourse to go after that house in a sense, but not your personal assets. It's keeping that separate, distinguishment.
Yeah.
Yeah, buying real estate for personal use, like I said, selling personal property to the IRA. Maybe you're thinking, I have an asset already, it's a rental income, and I want to put it in an IRA, shelter those gains. You technically can't do that because you're personally owning that property and now you're putting it into an IRA. The IRS would say you're self-dealing in that sense. You're trying to, move an asset you personally own. So you can't kind of work around yourself and direct family lineage, but other people can work with you, into private businesses or entities. It's just something that I would also recommend calling us about because maybe there's, something that we can find a workaround. Maybe there's a business you want to invest in, but you only own 10% of it and your IRA would only own another 5%. You have no decision making, you're not a highly compensated employee. Technically, that investment is possible because the remaining percentage is owned by non-disqualified people. So there's different things that we can work with you to really understand your investment scenario and to tell you, here's how you can structure this, here's what makes sense, here's something to avoid. That's what we're here for, is to give you that ongoing compliance support to avoid any issues with the IRS. We want to keep that off everyone's back.
Yeah, and just to add on that and double click on that, like 100% agree with you, Casper. I mean, we don't like saying no. And Casper and I will talk with the team, and I'll always try to find a way to do the transaction. Of course, if you're like, hey, I want to buy a house and live in it, I may not have a workaround, but almost everything else, like we'll figure out a way to kind of explain the rules and then figure out based off the tax code how we can potentially do this deal with you guys, so you can hopefully get access to the investment you want to make. But just to summarize real quick, and thank you, Casper, really, really great summary. Can't buy life insurance, can't buy collectibles. There's a carve out for pure metals, gold, silver, palladium, bullion, American Eagle statemented coins. And then you basically cannot do anything with a disqualified person, which is you, your lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entity 50% or more controlled by such persons. Otherwise, you can do it. Okay, so there is really, as we mentioned, an unlimited investment world that you can do. And if it's in the margins, like call us, like Casper said, his team is amazing. We speak every day. I'm talking to the team, going through ideas, going through new strategies to figuring out how we can best help our clients do the investments they want to do. So you want to do UBIT? You're doing so great, Casper. Why don't you?
Absolutely. Yeah, I could touch on you, but yeah. So unrelated business taxable income or, also debt finance income, I would say it's terrible once you really hit that tax rate. So there's ways to minimize it. But what it really is that your IRA is passive. So if you're generating active income or you're getting leverage, some kind of extension of credit, the IRS is saying that, your IRA is supposed to be passive. If you're generating active income, they're going to tax that. Or if you're getting an extension, let's say a loan for real estate, that's no longer the IRA's money, that's the bank money. The bank money should be taxed. So that's kind of what UBIT does, is just to preserve that additional kind of strategy of, if you are utilizing other funds outside of IRA purpose, then they may impose this tax. Definitely go over it with us on, what is your situation? Does UBIT apply? Does it not? Is there a way to avoid it? So there's three things that will trigger UBIT. I should mention this. It's purchasing, buying margin on stock. So if you're leveraging stocks, that will trigger UBIT because again, it's an extension of credit. It's not something that's coming from your IRA directly. It's the non-recourse loan to buy real estate. So let's say you take out a loan, that will also trigger UBIT. And I should say this is a debt to income ratio. So like, let's say, for example, I have a property worth $100,000. I have $50,000 in my IRA and I need 50,000 more to purchase this property. I go to a non-recourse lender, I go ahead and secure a loan. And so I'm pretty much at a 50% ratio. The income I get back from that property is going to be taxed 50%. So like 50% of it will go back to the IRA tax free, while 50% of it will be taxed at that UBIT tax rate, which will fall underneath trust tax. It could get as high as 37%. So we definitely want to avoid that. I believe there's certain thresholds. I believe to trigger the 37%, you need to make over $14,000 or $15,000 that year, but it builds up pretty quickly. And then the last topic here is the invest in a pass-through business. So let's say I want to invest into a restaurant and that restaurant is operated by an LLC. The LLC itself is a pass-through business. It falls onto the owners, that's the taxpayers, but the restaurant is creating active income, like ordinary active income. It's not passive. I'm being treated as an equity investor while my IRA is. So that income that's going back into my IRA will be taxed at that business tax rate. There's ways around it. Like Adam said previously, there's a C Corp that has like a kind of like a box. That corporation itself is not passed through. So if you're investing into a C corporation, you're actually blocking the UBIT entirely. You're just being taxed at 21% corporate tax instead of possibly that 37%. So a lot of people will like to take advantage of that roughly 16% delta and just say, you know what, this makes more sense for me. And then that's something that we can also give you consultation on, saying like, hey, maybe you're wanting to invest in that farm I mentioned earlier. That farm, however, you're raising sheep, you're selling it, that could be treated as inventory, that could be seen as an active business. If you're investing into it as like an LLC, you really could be triggering this UBIT. So, what's some ways that we can go around it? Maybe you just want to loan money to a farm. Maybe you want to set up a structure through the C corporation and see what we can really do to reduce that UBIT tax. If there is UBIT, we will file a 990T to report that. It's something that we do in our service just to make sure we give you the full service approach. If you go to a CPA, maybe they might charge a lot higher than we would. We have a pretty fair rate for our UBIT. It's roughly $300 a year, and we can cover everything. And you have also a compliance team involved. That's composed of specialists, paralegals. They know exactly what's going on, all the IRS codes, all the additional filings that we can do for you. So UBIT is definitely I wouldn't say it's necessarily an investment stopper because some clients will say, oh, I'm getting taxed, I should stop. It's in an IRA. But really, you're still building out your retirement. Your IRA is the taxpayer. You're not paying this tax. It's the IRA. It's just something to calculate and see if there's workarounds or if it makes sense. But I would definitely say, even if you are getting UBIT triggered, it's definitely still a reason to move forward with your investment because you're still getting those gains back into your IRA.
Yeah, and a good point. Just one thing to add is that I'd say 95% of investments do not trigger UBIT, and obviously the prohibited transaction rules, aren't an issue. So that's why I think you want to invest and work with IRA Financial. I mean, obviously I'm not objective, but I can't tell you over the years how many people have come to us and said, I never heard of UBIT. I just kind of watched your videos, read your blog, read your book, and now I'm concerned because I've been investing in real estate using non-recourse leverage for the last 6 years, and the company I use never even told me about this. So if you work with us and you talk to us up front, we can structure this stuff to minimize and potentially even eliminate UBIT. So it is, an ugly four-letter word. And as Casper said, it doesn't have to dissuade you from doing the investment, but it's something you want to address early on rather than late. So you can, come up with the best strategy to minimize or even potentially eliminate it. So as Casper mentions, a 37% tax rate, Threshold's around 15K. We'll file the 90T for you if you're part of our annual compliance service. If you have under $1,000 in net income, which a lot of real estate deals have in the onset years, you don't have to file anything and don't pay any tax. The good news also is losses that you have from real estate can be used to offset future UBIT. Casper, why don't you talk about opening an account since that's what you're really good at?
Yeah, absolutely. I mean, that's where I specialize in, of course. So I help clients with this exact kind of method. I give a consultative approach. I want to understand your situation, what you're trying to accomplish, what accounts you're working with. I tell you exactly, my recommendation as to what account could be best for you, what strategies I have for you, what to avoid or keep in mind. And once you feel comfortable and confident to move forward, that's when I send you that email with a link to get started, or you can just go online to our website, download the app as well. We have a very easy process to onboard. It takes maybe about 5 minutes to apply. You're really creating an account online, and then you're selecting what account you want to open. We get you an account number immediately. You're able to then move forward and begin your rollover process. So really, it's going online, creating that online portal account, submitting an application. Your account is open. Then we can work on doing the rollover or transfer to fund your account. That way, you can go ahead and start making your investment. So we're really here to make sure it's as easy as possible. I'll walk you through it as well. I'll have instructions for you, even screenshots. I can do anything, but really, it's as simple as going online, applying, and just selecting the account type, which you should. I'll give you direction, of course, which one to choose, because if you talk to any one of our teammates here, whether it's myself or my associates, we'll direct you into the right account 100%.
So Casper, like the opening account initial process, how long? 3 minutes, 5 minutes, 2 minutes? Like how long does that take?
Yeah. I mean, I've seen clients have done within 3 minutes, no problem.
Yeah, yeah. No, it's great. And we're always working to improve it. So that's the first step. You get your account. We let you know when you get your account number, and then we will initiate the transfer. So as long as you provide us where your IRA is, we'll pull it tax free, right? You don't have to do anything. And if you have money in a former employer, we'll help you complete the documentation so you can submit that to your former employer, the administrator of the plan, and then move that money over to us tax free. And then how do they make their investment? Like once the money's with us, they're notified. What's the next step for them?
Yeah, and of course, every step of the way, you are also remaining in communication with our team. We will be reaching out, whether it's transfers team or new accounts administration team, and then also like the full service team that helps you make the investment. We'll have a way for you to go online. There's a transact section, and that transact is really how you move your money around, whether it's a contribution, a distribution, making an investment. You're able to provide that information. We basically have a form for everything, any kind of request you want to make. An investment authorization, for example. You'd start filling that out, and just how I reviewed with you, we'd want to collect documents, make sure it's all good to go on our end, and we can process it out. So you'll have a portal. It's like, as you can see on the screen, that's like our app, for example. And on that portal, you'll find all your transacting details, your portfolio allocation, your summaries, everything you need to really, be mobile in your own account.
So is it scary to open the account? Like, do you find it intimidating? Like,
Not at all. I
yeah.
would say, I mean, we don't even charge you up front. You can open your account, get an account number, and we don't charge you until you fund your account. So you could really go forward, have the whole process set up, have an account number, and it's really just there, ready for you to make your investment. So we try and make it as easy as possible.
Right. And there's email and text, right? So like along the way, you
Yes.
know exactly what's going on, and you obviously have a point person. You can reach out to Casper or his team and be like, "Hey, I need to get my deal done in 4 days. Like my money's here. What's next steps?" And each process is super easy. I mean, we've been doing this 15 years. We got 27,000 accounts, 4.5 billion in assets. We probably do around 400 million in transactions every month. So we are moving money around a lot. So we know what we're doing, and I think we're really, really good at it. So, okay, Casper, tell us why everyone needs to use IRA Financial.
Well, I would definitely say, I mean, from everything you've heard here, the experience we have, the consultative approach, the ongoing support as well, the ease to sign up and also to execute your investments. I would say you want that from a custodian. What I hear a lot from clients that I have a consultation with, they're wanting to find a solution that really respects what they are wanting to do, and they want to stay in communication with it. Maybe you are a little bit nervous at first, so you just want that hand holding. That is what we're here for. We're going to stay in contact with you, and our departments will talk to each other. So I have some clients that come from previous custodians, and they're saying they always talk to somebody new. They have no idea what's going on. They don't speak to each other, or the customer support's not there. They're trying to get a hold of somebody and they can't. That's what we specialize in. We have a 4.8 star on Trustpilot for a reason, is because we're there for our clients. We prioritize them. That's one of our values. And of course, one thing I also like to mention is the fee structure. because really, like Adam said, we're here to help you. We're not taking a percentage of your fees. We're not trying to make, money off you. Typically in a, let's say a financial advisor or wealth manager, they take like 1% of all your AUM or transactions or anything else. I mean, if you have, let's say, $50,000 in an IRA here with us, you're already at that 1%. But let's say you go to 100,000, now you're at 0.5% of AUM fees, for example, if we just stay flat. So regardless of, how much assets you have or how many like what your valuation is of your account, we do not increase our fees. And that's why we see a lot of clients start with us and stick with us, because we're very consistent.
Yeah.
We let you grow, we let you go forward. I would definitely recommend comparing the fee structures, because let's say somebody has a lower annual fee than $500 a year, which is our fee. But then they have asset processing fees. Maybe they have, transaction fees that go into research fees or any other kind of fees that really build up. And at the end of the year, as you're making your investments, you could be paying a whole lot more, even though your annual fee is kind of lower technically. So I definitely say look into the fee structure. We have it on our website. You can download it. You can request it and you can compare. It's definitely something I hear a lot from clients is, oh, well, I stay with a different firm and they're able to, at first my fees were low, but then as I grew, now they're really high. I'm just looking for a lower rate. Why not start with us to begin with, so you don't have to worry about switching custodians and trying to do transfers? You can just go ahead and stay consistent, very simple, very flat. You know exactly what you're working with.
Right. And again, the flat fee thing, something I'm really adamant about, just because I just don't think it's fair and ethical where this is a self-directed account, meaning that you, the smart ones, are making the investments. We're not selling you anything or giving you advice. And then somehow we're going to charge you more because you're successful. Doesn't make sense. Doesn't seem fair. So listen, we're not the cheapest, but I think our fees are super reasonable and fair for the expertise and service. And I personally think you do not want to be going with the cheapest self-directed IRA company. This is your retirement account. This is hopefully you're going to have millions and millions of dollars in your retirement account if you do things right and diversify and invest and save. Are you really going to try to nickel and dime to take the cheapest company instead of the best? And I truly believe, and I put my reputation on my name on the line to say IRA Financial is the best in what we do. We literally wrote the book on the self-directed retirement accounts. And it's not, as we said, just the setup, right? Yeah, we can set up the structures is better than anyone else. But what I think where our expertise really comes into play is, as Casper, as you said, the hand holding, the structuring up front. Hey, there's UBIT here. Let's talk about this. Maybe a privilege transaction. Hey, you're self-employed. Let's get you in a 401k. Oh, you want a business? Let's get you in a Roth. Making sure you're in the right product, right? We want people contacting us. And then it's the annual compliance. We offer very, very industry leading annual compliance services, tax filings, tax reporting, all the way from doing the LLC filings to the tax returns, the partnership returns, the corporate returns, the 990T UBIT returns, to the 5500s for the 401k. So we do everything under the sun. There's nothing you will need to go somewhere else to do. We're never going to say go hire an accountant or go hire a lawyer to figure out. We will get you the answer. So anything else before we get to a couple questions? Anything else you want to add, Casper?
Yeah, I always like to say the term one-stop shop. You're dealing with us because we understand everything, the whole picture, and that's really what we're here for. Just to add on to what you were saying.
Okay, there's a lot of questions. I'm gonna try to pick and choose. Casper, I'll throw some at you if you want them, grab them. If not, I'll take them. Okay.
Okay,
So the
perfect.
first one I have with the Roth IRA, if I'm 59 and a half, does it still have to be invested for 5 years or is the 5 years waived? You want me to take it or you got
I
it?
can answer this one.
Okay.
So the 5 years will apply. That's part of the qualified distributions. As long as that account's been open for 5 years and over 59 and a half, then you can take a complete tax-free distribution. If one of those is broken, however, it's no longer a qualified distribution. You may be hit with some tax on that. So definitely make sure you satisfy both. They go hand to hand.
Right. The one thing I'll add is that anything you contribute to the Roth, you can pull out the next minute tax free. But the earnings, right? So if you put in $7,000 in a Roth IRA and now it goes to 12,000 because you bought Bitcoin, that $5,000 of earnings, that's where the 59 and 5 have to come in. The 7 of the initial contribution you can pull out anytime because it's after tax. Okay, next one. This is for you, Casper. For someone who's new to alternative investing, what's the best way to get started?
Best way to get started is definitely to have that consultation, of course, to open up exactly your right path, what you want to look into, how it operates, just so you're fully confident moving forward. And we also have a lot of resources for it, whether it's just making sure you understand how it operates or the investment options. And then really just to get started, I would recommend the custodian controlled account, that first one we talked about, because then we can give you that ongoing support, make sure everything is done right. You have a peace of mind knowing that we're backing you in every move you make. And also I mean, you could do hard money loans, for example, or real estate investment trusts, syndications, where all you're doing is just sending money in the name of the IRA into an asset, and then you just kind of collect it. So there's a lot of passive investments that we have experience with. We can share exactly what has worked, what you could try at a later time, or maybe, you want to start off with something light, and then you're more comfortable and you want to go into the LLC. That's perfectly fine. We can just add that LLC on later. So I would just say a good starting point is that self-directed custodian controlled IRA. It gives you everything you need to get, your hands and ready into the whole structure itself.
Okay. I think this one's good for you as well. Will IRA Financial take over self-directed IRA accounts from other custodians?
Yeah, absolutely. So that's where we can do direct transfers, direct rollovers. The money's being moved over in kind, so you're not getting any taxable liability, no penalties. It's just going from IRA to IRA, and we're also here to make sure it's done as quickly as possible, as seamlessly as possible. We may have some promos available as well if they have like a cancellation fee.
Right.
Sometimes they have a promo. It's switch 250. Typically, a termination fee is about $250. That's where we can give you this promo code, for example, if it's active, and then we can say, hey, you know what? We want to help you out. We want to make this as simple as possible. We'll essentially cover that termination fee by lowering our fee for the first year. So we want to work with you. We understand that, maybe you just paid for your quarterly fee, but then you have a termination fee, you're stacking on top of it. You really want to move, but then you're feeling like you can't because of all these fees. That's what we can do to make things a little bit easier. So just definitely call us, talk to us about your situation, and we'll see exactly what we can do for you.
Yeah, Casper's a nice guy. Uh, okay, I'll take this next one. Can you contrast these structures with the ROBS? Okay, so the ROBS is a rollover business startup. It's really used if you want to use your IRA or former employer 401k pre-tax funds to buy a business that you are going to be actively involved in and going to own more than 50% of, right? So you want to buy a restaurant or a manufacturing plant or a consulting company or insurance firm or something that it's not passive, it's active. You want to earn a salary, you want to be day to day. You generally are going to put in more than 50K, and you are not going to be able to do the self-directed IRA because you can't be active and own more than 50% without triggering the derivative transaction. Same with the solo 401k, although if you need less than 50K, you can always do what's called a solo 401k loan. And we'll do another, maybe the next webinar on the solo 401k, and we can jump into that in a little bit more detail in terms of how the loan would work and what kind of relief it can give you for using it to start a business. But so I generally say you want to be active, you need more than 50K. And the beauty of the ROBS is if you sell your business for a lot of money, you can shelter all the gains from the sale of the stock tax free, right? If a buyer comes in and buys the stock, he or she's buying it from your 401k, and the 401k doesn't pay tax. There's no ordinary income, no capital gains. So you can lock in all the stock sale gains tax free. You can earn a salary, and you can use your IRA and 401k to invest in your future. So it's a really great structure. We have thousands of them. I've written a book on it. So the beauty is, again, you call Casper up. You can call the 800-472-1043, or you can call Casper directly, or email him, Casper Dabek, irafinancial.com, CDABEK at IRA Financial, or 605-308-0273. You can call him at 2 in the morning. He likes that. And
Absolutely.
yeah, someone on his team will help you out. But that's why it's important. A lot of our competitors, for some reason, they don't have a phone number on the website, which I think is crazy. I mean, it's really important sometimes to talk to people. It's not always necessary, right? If you're just going to buy private stock or you know what you're doing, a consult's not necessary. But if you have some questions, and call us, like, it's free. You don't need to pay to talk to us. We are here, and if we don't know the answer, we're going to find it, although we're going to know the answer. Okay, Casper, this is you. I think it's a super easy one. Can you use your self-directed IRA to buy a house to resell?
Yeah, Absolutely. That's where I would see a lot of real estate investors because you do a lot of fix and flips and you can absolutely purchase one. You can even do like a foreclosure property like tax liens, deeds, and you can go ahead and make that investment in the IRA. Of course, the IRA has to pay for any kind of, rehab you do to it, whether it's just upping the value, maybe remodeling, anything else that has to be from the IRA. You cannot do the sweat equity yourself. You'll hire maybe like a contractor. And then, once you get that new valuation, you want to sell it off, not a problem. You can do many of those throughout the year as well. I mean, there's no limit necessarily as to, you know, whether or not you can't do it. It's just you just want to make sure you're keeping your IRA in a passive format.
Yeah, no, I agree. Okay, next question. I can handle this one. I'm an employer and I'm going to establish the simple this year at Schwab for my employees. I've not yet contributed to the simple. Is it possible for me to hold my simple at IRA Financial instead of Schwab? Absolutely. So right now you could open a simple with us, and you or your employees could have segregated accounts to do alts. We're also very close to launching our equity platform, which I'm super psyched about, where you'll also be able to buy equity. So you're really not going to ever have to go to Schwab ever again for any of your IRA needs, because we're going to do it all here for you. But yeah, you'll be able to do equities very soon, cryptos, alts like real estate or anything the employees want to do. It's all segregated. So as an employer, you're not going to have any risk. Next question. I just opened a self-directed IRA for myself and a self-directed for my wife. This call already has been more helpful than the company I'm using. Well, you should have used us to start with. I like the rollover to IRA Financial. How do I get started? Okay, Casper, what would you tell this individual?
I would say if you want the consultation, my contact details will be available. You can reach out to me directly and I can ensure I answer any specific questions. Otherwise, of course, we do have a very easy app or website that you can get started on. Since you are pretty experienced, you already have a self-directed option. I'm sure you're ready just to get started. So whichever option you feel comfortable with, we can have a consultation beforehand, or you can move forward on our website and click on that sign up process to get started. And then we'll definitely be in contact with you pretty much immediately.
Yeah, honestly, 15 years in the business, I still take insult when someone sets up a separate account, an IRA with someone else. I get it. Listen, there's 65 million IRAs. There's hundreds of millions of Americans that have potential to open an IRA. I know, but I so believe in what we do. I so believe in what IRA Financial stands for and the great products and service and team we have, that I still get insulted and take issue with when people set up self-directed IRAs with other companies, but at least you came to your senses. You're gonna move back to us. So good job. Okay, maybe one more. Okay, if you sell a property that is in a self-directed IRA, does the money go back to your IRA, Casper?
Yes, absolutely. You'll want to make sure it flows back to the IRA. Whether you're using an IRA or the IRA LLC, you want to make sure the money still flows back because we want to ensure you're not taking a distribution, you're not, losing the money trail along the way. It's easier for you to maintain that tax advantage status if it's going directly back to the IRA. Every single year we will have an asset valuation, and we want to ensure all the cash and all the assets are accounted for because that's how we can guarantee you're not getting distribution tax or nothing's kind of out of whack with the bookkeeping. That's what we're here for as well, just to make sure the money trail flows correctly. We'll have an account for you here that you can immediately have the wiring details for, or if you're doing the LLC option, that is your cash flow account. Your LLC is getting rental checks, for example, it goes right back into that LLC account as well, not to you personally. You just don't want to have that separate transaction. I mean, if it happens, you can fix it, but you just want to avoid that because let's say you do forget to fix it. Now you have a transaction that doesn't make sense in the eyes of an IRS kind of audit per se. Very low chance you'll get audited in the first place, but you just want to make sure it's done right. The money trail shows where it's going from, where it's coming from. You can see the whole cycle.
Okay, last question. I'll just take this real quick. With an IRA LLC, are the other assets not in the LLC protected, or just the assets that are in the LLC? So the thing with an LLC is that the LLC protects the assets outside of the LLC. So if you have $100 in your LLC, a creditor can technically attack the $100 in the LLC. But if you have $1 million outside of the LLC, the $1 million is protected based off limited liability protection. So that's why it's so nice to have limited liability protection. That's why businesses in this country will use either a corporation or an LLC to protect the liability of the assets outside of the LLC from the owner by the owners, and the same goes with IRA. So I think that's going to do it. Casper, any last minute remarks? Anything you want to add before we sign off?
I mean, it's been a pleasure. I do this every day, and I love talking to clients. I will always hear this, situation you're in, the strategy you have. I want to hear it because honestly, it's great ideas sometimes. I mean,
Yeah.
I'll learn something from you guys, and of course, give that consultation to show how we can help you out. So we're all really happy to help you out. I definitely am. Schedule a call with me. You could do it in, virtual like this or a phone call, anything you prefer. Definitely available for assistance.
Yeah, and I'll just double click on that. Like I only heard of Bitcoin because someone called up and I started talking to this person, and this was 2014. Never heard of Bitcoin before, and they mentioned Bitcoin, and I didn't unfortunately buy it till like a year later. But yeah, you learn so much. We speak to so many incredibly smart people, brilliant investors that obviously are smart enough to know that you need to diversify. You shouldn't just put all your money into equities and just let it sit. You need to be a little bit more active and take advantage of the power of diversification. So it's great. And the fact that we can partner with all you guys and not feel bad about selling you products or upselling you or charging you commissions. Like I think it's such a really good partnership that we have with all our clients that it's so much fun.
I agree, 100%.
Yeah.
We're here to help. We're just a solution provider. Every doorway, we can open it for you.
Awesome. Okay, so thank you guys for watching. Really appreciate it. Hope you enjoyed the presentation. If you have questions or ideas for future presentations, let us know, and we look forward to continue working with everyone. Have a blessed day. Thank you.
Absolutely. Thank you, everybody.